if you look at broad money supply in the United States this year or bank deposits this year, they're actually flat. Usually money supply growth is, maybe 7% per year on average. It spiked over 25% during the height of the 2020 and 2021 stimulus. But now it's basically running at 0%. And so that's a tough environment for Bitcoin and other assets in the ecosystem. Anything is kind of considered risk on or speculative in any way. But I think that eventually, when you get to a part where the Fed is unable to keep tightening, and you kind of have that shift in liquidity, then I think the space and Bitcoin especially, and we'll see what happens with other projects. I think that gives them another opportunity for another leg up.
Crypto investor and macro guru Lyn Alden recently had an interview with Cointelegraph to discuss the current path of the U.S. Federal Reserve and how that could affect Bitcoin and other cryptocurrencies. Over the past few months, we've witnessed a lot of volatility in the markets in response to the central bank's struggle to bring inflation down. According to Lyn Alden, it might yet be too early to expect a Fed pivot as a result of a number of factors. But the macro guru believes that it will come, and when it does, risk assets like Bitcoin will benefit greatly. This, Alden explains, might even usher in the next bull run for the world's largest cryptocurrency. As of press time, Bitcoin has regained some of the previous losses and is now back above $19,000. On Wednesday, the crypto asset briefly slipped below $19,000, hitting a low of $18,563. That was its lowest price since June 18, and it caused some worries that it would trigger yet another drop to $17,500. But it climbed back above $19,000 on Thursday. However, despite the recent gains, Bitcoin is still down over 70% from its all-time high and still expected to get a lot of heat from the ongoing global economic downturn. In her interview, Lyn Alden discusses the impact of the Fed's tightening policies on Bitcoin and the rest of the crypto space. Please watch, like, and share this video. Also, ensure you drop your comments and observations below and subscribe for more videos like this. Thanks and enjoy the video.
So I think longer term, the way I would phrase it is that I don't think the Fed's going to be able to normalize interest rates. And what I mean by normalize is, if you look back in history, more often than not, interest rates were higher than the prevailing inflation rate. Basically, you'd earn interest on your treasuries or your bank deposits at a rate that was higher than a headline CPI. And for the most of the past decade, that's not been true. Only for very brief periods of time has that been true. Mostly we've been in a negative interest rate environment, and of course, with inflation this high and interest rates still this low, that hit pretty extreme levels here in 2022. And so, they're going to tighten policy, but I think the biggest challenge is that they're going to be unable to quote unquote normalize policy, which means to get back to a period of structural positive rates. And that's because of how much debt is in the system. So if you look at public debt and private debt in the United States, it's about 370% of GDP, and you have similarly high numbers in Europe and Japan, right? So a lot of the major developed countries have an inability to get to positive real rates and hold it there. And if that's true, and I think it is, then that is bullish for more scarce assets in the long term, which would include certain types of equities and things like that, but also includes Bitcoin and any other project that is going to stick around and grow for a long period of time. And so, but if you look in the near term, for example, if you look at broad money supply in the United States this year or bank deposits this year, they're actually flat, all year to date here in 2022. So it's ironically the dollar has been less inflationary than Bitcoin, with like an 8-month snapshot. And of course, that significantly deviates from the normal trend. Usually, money supply growth is maybe 7% per year on average. But I think that eventually, when you get to a part where the Fed is unable to keep tightening, and you kind of have that shift in liquidity, then I think the space and Bitcoin especially, and we'll see what happens with other projects. I think that gives them another opportunity for another leg up, but that could take quite some time to get to. So I think so. There's a couple things to look for together. And so one thing I like to point out is that if you look at the Purchasing Managers Index, the PMI, that is a kind of a measure of whether an economy is accelerating or decelerating. And so if it's above 50, it means it's growing, and if it's 55 or 60, then it's growing quite quickly. And if it's below 50, it means it's shrinking. And if it's below 45, it means it's shrinking pretty severely. And generally, when you look at PMI cycles for most countries, you'll see something like a 3-year cycle. It looks like a sine wave going across. And if you map Bitcoin's price onto the US PMI, you have a pretty strong correlation. Generally, rising PMI environments, basically periods of economic growth, that's when you're getting a positive Bitcoin price. When you have a declining PMI, you generally have weaker or outright falling Bitcoin prices. And of course, there's high correlation across the whole digital asset space. Um, so if you look at, for example, the 2017 bull run, the Fed was tightening policy throughout that entire time. They were raising rates throughout the entire 2017 bull run, but they were doing so at a time when PMIs were going straight up. So you had fiscal stimulus happening from unfunded tax cuts, and then you had the Fed trying to tighten policy, and that was a very risk-on environment. So emerging markets did well, Bitcoin did well, cryptos did well. Stock market in general did well. Pretty much risk assets across the board did well, despite the fact that the Fed was tightening because they were tightening in a way that made sense relative to that economic cycle. The challenge that they ran into by say late 2018 was that the economy rolled over and they were still tightening. And that's when they started to run into turbulence and they eventually had to pause. And what we're seeing now is kind of similar, where except even more shifted back, where they didn't even start tightening until we already got the rollover in the PMI. And so now they're tightening policy into a declining economic environment. And I think that's the toxic combination that until that ends is pretty challenging to get a significant and sustained rally, in Bitcoin and the rest of the space.
Not only is the Fed raising interest rates, but it is also committed to reducing its $9 trillion balance sheet. It is essentially sucking out a lot of liquidity from the market and at the same time raising borrowing costs while inflation is still at 40-year highs. This is certainly not an environment for any asset to thrive, and Bitcoin is no exception. But the Federal Reserve cannot tighten forever. At some point, it is bound to realize that and ease off a little before the recession becomes a full-on depression. Let's get back to Lyn Alden's interview as she discusses the role of Bitcoin as a hedge against inflation.
So generally speaking, over the past, 3 cycles, if you map Bitcoin price relative to broad money supply growth, it's actually a very strong correlation. Bitcoin does exactly what you'd expect it to. If dollars are being expanded at a higher than normal pace, Bitcoin is usually doing quite well as a scarce asset. What we saw is that during 2020 and 2021, we had the fastest money supply growth in decades, and Bitcoin did amazing along with most other risk assets. And this year to date, we've had complete cessation of money supply growth in the United States. And so it's not surprising that we had a rollover in assets that are basically, marketing themselves as these, scarce and inflation resistant assets. And the challenge is that the actual price increases we're seeing, especially around energy, are happening with a lag from that money supply growth. So, a lot of financial assets felt the effects of that money supply growth before all these price impacts happened. And now these price impacts are happening, and people are saying, well, why didn't Bitcoin protect me from inflation? And the main two ones are one that it already did. It's just that, in the core, what triggered inflation happened a year or two ago, and Bitcoin was responding to that. Another issue, I think, is that the word hedge normally describes paying off in the specific moment that something happens, right? So if you short a stock and then the stock market goes down, it's paying off in that moment. So, when it comes to inflation, normally the things that pay off the best in the moment are ownership stakes in the things that are driving that inflation, which in most cases is energy and energy related types of assets. So those are generally the best types of hedges you're going to get against inflation, because they're going to go up specifically at the time where that inflation is happening. The way I would describe Bitcoin is that it's more like long-term protection from inflation, because you're basically buying into a long-term scarce asset against an asset that is historically growing, and talking about the dollar here, growing at 7% a year or more.
In other news, the European Central Bank has delivered the biggest interest rate hike in its history. According to reports, the central bank lifted its benchmark rate by 75 basis points on Thursday, following the same step as the Federal Reserve's June and July hikes. The Bank of Canada also announced a similar jumbo interest rate hike on Wednesday. At the beginning of the year, the bank's rate was 0.25%. After Wednesday's 75 basis points hike, it is now at 3.25%, its highest level since early 2008. According to reports, the Federal Reserve is expected to announce its third consecutive 75 basis points hike during its next meeting. Japan, South Korea, the United Kingdom, and several other countries are also contemplating or making similar moves to bring down inflation. What do you think this means for Bitcoin and other digital assets? Please drop your replies as well as your comments on Lyn Alden's interview in the comments section below. Also, sure you hit the like button and subscribe for more videos like this. You can also check out our other crypto-related videos to stay updated on market trends. Thanks for watching.